All right. Welcome, everybody. Happy Tuesday. Welcome to Top Trades Live. I'm here with Enrique. It's been a while, Enrique, since we've talked face to face like this. You've been traveling around. How are things going?
Good. And I have no more travel left. So I have days. I've got days in Baltimore to come visit you, and that's it. And I'm very happy about that.
Awesome. That sounds exciting. So I hear that there's an election today. I'm not 100% sure, but I think I saw something on the news about there being a presidential election. So I guess we should maybe just hit on that a little bit. We can talk about what might happen if the election results are delayed and we don't know who the winner is immediately and how the market has reacted in times that that's happened in the past. We have two really, actually pretty recent examples of that, and we can go over that.
Yeah.
I know you want to talk about some earnings report based opportunities that you're seeing out there, some things that are happening with the nuke stocks, and we also want to get into your idea of echo trades, what they are, how they work, and what kind of opportunities we could see in these moving into 2025. So let's kick it off. What do you have to tell me about this election, this mysterious election that's happening right now?
Well, a couple perspectives. The first thing that always comes to mind is when everyone expects something to happen, that something begins to get discounted in the markets. And I think the expectation is a close, contentious, potentially violent, and certainly volatile election. And the funny thing is, that might be all true, but I'm not sure it's going to matter to the markets anymore because everyone thinks that the results are going to be delayed. Everyone thinks there's going to be challenges. I don't know who's sitting there and going, "Oh, the election's going to go off fine. Someone's going to win. We're going to know by Wednesday, and the markets will pay no. The markets will just completely move on." But the funny thing is we actually that is what happened back in 2020. When it came to Wednesday morning, we didn't know. It seemed like it was leaning Biden, but we weren't 100% sure. And we didn't know until Saturday morning. And I since heard on CNBC this morning, the reason why it's Saturday morning is because there are a number of states, and one of our very smart listeners is going to know which states, that as long as your mail-in is postmarked on election day, you're fine. And so, like, I think one of them is George. I'm going to get it wrong. Don't I forget which ones it is. But I guess my point is, number one, when everyone agrees that something's going to happen in the markets and then it happens, it usually doesn't have the intended effect. It gets discounted. Number two, we've had a contested election in 2024 in almost an identical situation. And, what I published a note that basically said the market went up. The market, the last four elections, presidential elections, the market is traded down into the date and then traded up after the date. We've done the exact same thing here, including today so far. And I think that it's just going to be a big nothing burger, and the one I come back to, I mean, I'll throw a couple other data points out there. So people could say, well, 2020, it wasn't about that. It was about the insurrection, the controversy, all that stuff, whatever we want to call it. I'm not going to step into those waters of January 6th. But you go look at the tape, and the market traded up on January 1st and didn't look back for 6 months. The market didn't give a S about January 6th. It made absolutely no difference. And then I even go back to the hanging chats 2020. I was an active trader back then. We were actually we were just about to start our first hedge fund. I was working at another hedge fund, and that market was a much different environment. We were just entering into the collapse of the internet bubble. We were about to go into the worst bear market that we've seen, I believe, certainly for the Nasdaq ever, but even for the S&P, as bad as we've seen in 50 years. Again, this is late 2000. It was 6 weeks before the Supreme Court ultimately made the decision, and the market was basically flat. Okay, it kind of traded around. So I just don't think it's going to mean a whole lot. It's and I'm not sure it means. I threw up one more statistic or one more chart today on social, on X, and stock twits, which was from Charlie Bolello. and it's all of the presidential periods going back to Herbert Hoover. There's 24 of them. In 20 of them, the stock market was up. By the way, in 2 of them, the stock market was down a little bit. And so my basic point is, I can tell you how the election's going to matter. If we elect a president, 83% of the time the market's up in 4 years. Well, I'm pretty sure we're going to elect a president at some point in the next day, weeks, months. And therefore, there's an 83% chance we're going to be up over the next 4 years. That's data that I can rely on. So, yeah, I'm going to watch it. But I'll tell you what, I'm going to be asleep at 9. I'll get up at 3 or 4 a.m. as usual, just because that's when I get up. But yeah, I think it's got the potential to be a big nothing burger. I actually don't hope I'm wrong, because I think that would be very good for America and for the markets. So
Yeah, absolutely. I feel the same way about that. And I'm going to try to go to bed early too. I don't get to bed that early, but I'm going to try my best. But I'm not going to wake up as early as you either. I'm going to try to sleep right on through it and then wake up and see what tomorrow brings. You mentioned the chart about going back to presidents. I'm sure you saw this chart that had been floating around last week or the week before of Bitcoin, and how Bitcoin tends to break out after presidential elections. And again, it doesn't matter the party who wins. Bitcoin tends to just break out around election time every 4 years. So it'd be very interesting if that was the case too. We have Bitcoin firming up here, just below 70K today. I don't know exactly where it is right now. Yeah, it's in the mid 69K range right now. It certainly feels like it's starting to percolate and chew away at supply right there, just below those all-time highs. And we've been talking about a big crypto ripper heading into the end of the year, and I still think that's very much on the menu, regardless of who wins. And I know there's been a lot of talk about all the hardcore crypto people are very pro-Trump right now, but I think it would be very interesting, just taking the contrarian side. Even if Trump doesn't win, if Bitcoin just rips, historically that would probably be the case, right?
I think that we did a paradigm call with gun to our head, make an election prediction, and I just for the record, I said probably Trump, just because I could go through some of those reasons why, but I don't have any idea who's going to win. Mm-hmm. But I did say that they asked for a pick, if either candidate won. And I said, well, with both candidates, I'd pick Bitcoin, because I think that with Trump, there's a perception, which I don't think is incorrect, that he is now pro crypto, pro Bitcoin. And I think Bitcoin can fly. And I think with Kamala, she's not as negative. She actually has come out a little bit more towards it. I don't think it'll be as negative as people think. And I think gold is going to lead Bitcoin. And this has been my argument, is that gold and silver, which, by the way, there's a crazy thing. Bitcoin gets no respect. I'm telling you this right now. I was watching CNBC, and it might have been last night, and it was one of the pundits. Actually, it might have been my old friend Carson Worth. Okay, I don't know if you know Carson. He's a technical analyst. He's on CNBC. Good old friend, good friend back in the day. And he goes, I'm going to surprise you. Here's silver up 40%, gold up 32%, the S&P up this, the NASDAQ up this, the Russell up this. And he was basically trying to make the point that people don't realize that metals have done even better than stocks. And I'm screaming at the TV, and I'm like, and Bitcoin's up 65 or 70%. What are you doing? Why don't you throw that on there? So yeah, look, I think it's gonna fly. I've been on the record for a Bitcoin 100,000 and Bitcoin 1,000,000. Now that one doesn't happen quickly, but I think we get through this. I think we stair step I say by the end of January, because the way the markets actually work, and this is a little quirk, is I don't really believe by year end. Most of what happens during a year happens by the end of November, the first week of December, and you very seldom have anything happen. But if you add the end of January in it, you really get kind of the full year-end effect. So I'm going with Bitcoin 100,000 by end of January.
Yeah, I'd like it. And I think, it's well within reach now. It's not a crazy thing to say. Maybe when Bitcoin was $5,000-$6,000, talking about Bitcoin 100K would sound nuts, but definitely not right now. And you think it's the Rodney Dangerfield trade
right. Well, certainly it is. Carson's a smart guy. And I understand, it's not been around as long and all that. But, again, we've had this conversation before. I think it's just a demographic thing, because I'll tell you, I talk to people in their 20s and 30s, and they're talking about Bitcoin. So, I think it's just that most of the news media and all this stuff is dominated by people in their 40s and 50s and 60s, and they talk about gold, and that's great. I've said this before. I think gold does go higher, but I think Bitcoin could be the hidden winner here, and surprise people. And we'll see when it goes to 100,000 here in the next 6 months. Or who knows? Maybe it goes to 30. We'll see.
Yeah, I think you're definitely right there. The younger folks who probably would be more enticed by the gold narrative from back in the day have definitely gone with crypto instead, and it's definitely captured that group for sure, I think. And there's definitely a rift there, and I think maybe as Bitcoin matures and those people become middle-aged and older, we'll see the new younger generation jump on Bitcoin too instead of gold. It'll be interesting to see how all that evolves.
Yeah, look, I think that's one where you just position and you take a portion of your portfolio, and it doesn't have to be a crazy amount, and just hang out. But yeah, I think it's going to be very interesting in these next 4 weeks in particular for Bitcoin. That could be the one asset that I think could really fly.
So something Bitcoin doesn't have is earnings. And I know there's some earnings reports just floating around out there. We've had a lot of earnings recently. We're right in the thick of things. Last week was a big one. What do you see this week in terms of opportunities as far as post-earnings trades are concerned?
Well, I'll say a couple things. I think that there was a lot of criticism maybe of Mag 7 earnings and this perception that the Mag 7 disappointed. We had a really unique period here where 5 of them reported in 1 week. The funny thing is if you look at the average of those 5 companies, they were actually up on the week. So I think what happens is we discount the big up moves, which in this case were Google and Amazon, and we overweight the down moves, which in this case were Microsoft, Apple, and Meta. But the earnings were good, and again, I think this is when you're in a bull market and you're in an economy that's growing, what happens over and over and over is this: companies have good growth. The company comes out and stocks are up going into earnings. Company comes out and on 15 metrics, beats on 9 metrics, meets on 5 metrics, and misses on 1. Okay. Azure's revenue growth, instead of being 23%, was 20 or something like that. And then the stock sells off, 10% or 5% into that. And that's not wrong. Okay. Look, price equals truth. But what's happening is you got to understand is that there are marginal there are people that are looking with very small windows and people that are looking with very large windows. And when stocks are up a lot, things are growing, it leaves these stocks vulnerable to what I'll call marginal sellers. So this doesn't mean people that are holding it for the long term. It just means that people that they owned it, and they owned it because it was going up. And then when something happens that it doesn't go up, they're going to sell it and make it go down. And the stock that I would put here that I think is the most interesting opportunity is Lilly. And I don't know how many of you follow Lilly. We obviously know the story with Mounjaro and Ozempic, all these the GLP-1 drugs. They reported a fantastic quarter, a really, really great quarter. But then on the quarter, the management literally got up and said, this is what they said. They said, well, next quarter, we think things are going to decelerate because we don't want to sell as much, because we're worried about our ability to deliver the product to the customer and the customer service. So I just want that to sink in for a second. So there's so much demand. Yeah, it's too popular, but we care about our customer service. So we're going to slow things down. And it's not going to, by the way, the earnings, and I'm a big fan of earnings revisions went up. Every number went up. On like, I'll pull up the charts right now. The revenue estimate went up, the earnings number went up, every number went up, but management got on there and just said, hey, we're gonna take our time. We're gonna take our time. And the stock gets slammed. But this is an example of when you have these things in big uptrends, and the management could have managed the messaging better. But you know what? I give a S about about managing the messaging around a stupid quarter. Like, what I care about, let's go to the tape here. I'm looking at earnings growth for, that quarter that they just reported, they grew earnings by 1,080%. Okay. This next quarter, they're going to grow earnings by 120%. The next quarter after that, 99%. The next quarter after that, 46%. So Lilly is a perfect example of what the earnings season can do in terms of delivering actionable ideas, some of the highest quality names in the world. And by the way, Lilly right now is at an RSI of 22. Okay.
Yeah, I see. I have it up right here. Yeah.
I haven't run the numbers yet about what happens when Lilly gets to an RSI of 22. I generally wait for it to go back above 30 because I don't know. It could go to RSI 15, 16. I don't know, but I'll tell you, with Lilly reporting 1,000% earnings growth, beating numbers going up, and the stock trading at an RSI of 22, you buy this stock.
The last time RSI was at 22 or lower was the COVID crash for Lilly.
Okay. That makes sense because the last time that Lilly gapped down the way it did, I remember this on the day that they reported, they said it was during the COVID crash. Yeah. So what I can tell you is this ain't COVID for Lilly. And I want to be careful here too, because I'm not coming out and saying, I think there's going to be challenges for GLP-1s. I think that there's competition. We hear about Viking Therapeutic, I think that you could get to saturation. And so all that's all true. But it ain't true in the next month. It ain't true in the next 3. We're talking about trading here. And trading is about finding high probability bets where you can take advantage of the fear and greed and panic and emotion of other investors. And a 22 RSI on Lilly, who's blowing away numbers, is absolutely taking advantage of other people's emotion. And this is the trade you got to take 100 times out of 100.
Yeah, and once again, it's this hyper focus on every 3 months instead of seeing the bigger picture, missing the forest for the trees, if you will, on something like this. And also, I mean, look at this gift here. I mean, it's back to levels we haven't seen since this dip in August, but also it really hasn't gone anywhere since May. For a company that's producing this much, it's pretty incredible.
And I think that's actually a pretty interesting point. I'm gonna pull out here for a little bit. This might as well be a member of the Mag 7, right? Like what's the market cap? It's 758. So people talked about it getting up there. I think that Lilly, if you look at the Mag 7, they really haven't done very much since April or May. And again, we saw the market breadth expand, which is very bullish. I kind of get back to Bitcoin though, too. I think we're a coiled spring here. Because and let's get back to you saw the Goldman note, my old friend David Costin talking about 3% returns. And so for those of you who don't know, there's a market strategist at Goldman named David Costin. He used to cover real estate. He used to be a REIT analyst. It was 25 years ago, and he put out a report that generated a lot of press. He was saying, we're going to see 3% returns for the next decade. And what he was doing is he was looking at what's happened and some of the valuation multiples and all that. And, I had a couple thoughts. One thought is, well, we've only seen a 3% return across a rolling 10-year period, 9% of the time in the last 120 years. So you're basically telling me that's a 1 in 10, so I don't like those odds. I'll take the 90. I'll take the over on that.
Sure.
Number 2, though, is maybe, but I'm focused on what's going to happen next. And what's going to happen next is we're still going to see rate cuts. We're going to see at some point in the next 2, 3, 4 months, we're going to see less political instability. I mean, it's going to be hard to, again, anything can happen. But we saw January 6th and the market just traded right through it. That's actually a perfect example. Do we think this will be worse than January 6th? And if it is, maybe who cares? Because the market just traded right through that. So I think we're a coiled spring on, the Mag 7, on Lilly, and, take advantage of these opportunities when you see them.
I mean, here's Mags right here, the Roundhill ETF, and we're still below that peak, and we're still continue to coil like this. This chart looks a lot like Nvidia. This chart looks a lot like Apple. They're very similar charts out there where we're just sitting right there, perched, ready to do something. Apple, I think, is one of the best looking charts out there, nice and coiled, even after reporting earnings and dropping a little bit.
Well, what's funny too is I'll tell you what a good strategy is, and we were pushing this, is in the context of that, and I'm pulling Tesla out of this because Tesla's a whole nother animal. Tesla's the one that has negative earnings revisions. Okay. Right. For the rest of them, just sell the leaders and buy the laggards in the Mag 7 as long as they're all beating earnings. That's what happened with Google, right? Google was the big laggard because they reported, what Pinch or whatever the CEO's name is, here, let me get it right, had come out and said, we're going to spend infinity, Pichai, sorry.
Yes.
And had said we're going to spend infinity on AI and hyperscaling, and then all the DOJ stuff, and they came out and reported a blowout quarter, and it was the one that was up the most. So I think that's another interesting trade within context, is pull Tesla out and on the sexy six, just buy the laggards, and I think you got a nice trade there.
Yeah, I like that. The dogs of the sexy six.
The dogs of the sexy six. Yeah.
Why not? I mean, that makes a ton of sense. But yeah, I mean, and Google is fading a little bit from those earnings, but I feel like this is another gift right here of it, finding support down here after closing that gap. A nice green day right here after the election. Again, like it's hard to find fault with a lot of these charts heading into the end of the year, because it feels like we're just taxiing toward the runway right now, and then it's going to be liftoff. And those last 6-7 weeks could really be the time to make hay. And we've talked about that. We've beaten that horse about making hay when the sun shines, and this is going to be one of those times.
And I'm going to say something that just is occurring to me is because these conversations, sometimes they crystallize things. What's really going to surprise people is I think it happens in the next 3 weeks, next 4 weeks. Everyone's kind of like, oh, well, I can't do anything. The election, I can't get in front of it. And I think we get whatever the hell happens in the next 24, 48 hours, and boom, we stair step up right into December 6th, 7th, and then nothing happens because everyone leaves. And so that will catch people off guard if we stair step in the next 3-4 weeks.
Yeah, that makes a lot of sense. And you have like some Johnny come latelys coming in after they see things moving, and then into the middle of January, and then that's it. We've exhausted that big momentum move, and then we can go from there. Let's shift gears a little bit here and talk nukes. It looks like there was a big gift in a certain stock that was offered up by the market yesterday. I'm talking about Talen Energy. That's a name you might be familiar with right there. What do you have to update us with this one right here? It's absolutely ripping today, up almost 10%.
Yeah, look, I think this is why people should subscribe to services like Paradigm. Guys like you and I have been doing this for decades. And it's not just sometimes about trading, it's also about understanding the underlying industries and everything. And very simply what happened, and I put this in the top trades board yesterday, is there was a regulatory decision about the Amazon deal that had happened with Talen. And no one who was talking about understood almost any element of it. All they see is regulator denies or rejects Amazon deal. That's not actually what happened on almost any level. It was they didn't reject the deal. They rejected an amendment to the deal. It was only a tiny part of it. It could be appealed. It's only, small numbers, etc. But when you get things like that, that's when you have opportunities. So, we came out blasting on social saying, buy the hell out of the stock. And, I have a friend who hit me up. He said he bought it in the pre-market at 152 yesterday, after we were out there, we're pushing it. But it gets to, and I'll bring it to another stock here in a second, getting to the earnings of it, just when you find these long-term trends, Lilly as a perfect example, Talen is a perfect example. You find these long-term trends in the stock. You can see it in the chart. But you also find ones that are backed up by fundamentals. Lilly chart doesn't look like Lilly chart because it's some speculative meme, GameStop. It looks like it. Yeah, it looks like Lilly stock looks like Lilly stock because they're kicking ass, fundamentally. That's why Talen looks like Talen. You should own these. These are the kinds of stocks that you own and you make 2, 3, 5 times your money. But then what you can do is you can be tactical. And we used to do this in my old fund, is what we would do is we'd have a 4% position. And then when a stock went up quickly and went up to a 6% position, we'd sell down to a 3, right? Because if we liked it, if it happened quickly, okay, not if it happened over time. And then when we were at a 3, if it then eventually pulled back like it inevitably would, we'd go back up to a 4 or 5. And what would happen is we would have stocks that were up 20% and we were up 50 on them. We had stocks that were flat that we were up 10, 20% on. And I'm not advocating that people do that. We were like professional investors. We had our own software, software that I still am working with that we're going to talk about in the future. But let's go to one other stock here off of Talen, because I'll give another hot opportunity. Take a look at Constellation, CEG.
Yeah.
So Constellation is the largest of these companies, of these nukes, nuke operators. It's the largest, it's actually the second largest independent power producer in the country. Vistra's larger, but Constellation had three things happen to it that caused it to be worse. So the rejected deal was at Talen, not at Constellation. Okay. Constellation gapped up back in September because if you remember, they announced this deal with Microsoft on 3 Mile Island.
Right.
And that deal's another example where headlines are just BS. Everyone's like, oh my gosh, they're restarting 3 Mile Island. This is crazy. Well, no, 3 Mile Island had two silos, one that went kaboom, it didn't actually explode, but one that went melted down in 79, yeah. And the other, which then operated safely for the next 37 years. And so they're restarting that one. And that was one of the things, there's all the headlines because they want the clicks, right? And so the stock gapped up. They reported numbers yesterday. Guess how those numbers were?
Fantastic, I'm guessing.
Fantastic. Blew away everything. Blew away EBITDA, raised guidance, etc. Stock's down 10%. What are we missing?
Yeah.
We're not really missing anything. What happens, there's a reason why technical analysis works. Gaps tend to get filled, right? Because when you have a big gap, what happens is you have a certain amount of people that now own it at a much higher price. And usually there's an extension on the chart. So you've now become quite extended. And then what happens is gaps tend to get filled towards the moving averages. Take a look at what's happening here. Pull up the 50-day moving average on the stock.
Do I have 50-day? Yeah.
There you go.
There it is right here.
We're hovering right around that 50-day moving average. So This, to me, is another gift. This is a nuclear, I can't even blame this one on earnings because the earnings were outstanding, but this is what earnings season does, right? Is you go through earnings season, you can find these things that have incredible uptrends. And look, honestly, you probably could buy Lilly and you probably could buy Constellation, and both of them are going to be up 30, 40, 50% from here, maybe even 100% in the next 3-4 years. I'm not talking about that. What I'm telling you is that, Lilly's going back to its old highs. Constellation's going back to its old highs. I mean, if Constellation goes back to where it was, a week ago, you're looking at 266 on the shares. You're looking at a 50% move, 15% move. I think that's going to happen before year end. That's a pretty good move, to get in 4 to 6 weeks.
Yeah. All these gifts that the market seems to be giving this earnings season, lots of good stuff. So what else do we want to talk about here before we move on to our big topic of echo trades? Is there anything else that you want to hit on before we get into this new theme?
Well, I would encourage people, put us, because I said this last time, put some tickers in the chat. I have the chat open here. We'll talk about them towards the end and kind of go through them round robin style. Maybe I mean, what's some of the earning stocks you want to go through? The funny thing is, I think that the new theme that we have actually fits a ton of stocks that you have been pitching. So this is a theme I've played before, but you're the one who made me think of it today. So maybe we talk about SOUN briefly, and then and give us an update on that, and then I'll introduce the concept that we've been bandying about internally, and we published yesterday.
Yeah, sure. So SOUN, obviously, on the speculative end of the stocks that we're willing to trade right here. Huge short interest in a name like this, and we're looking for a big squeeze, and we got the start of one here the week of the 28th, the week before Halloween right here. Big move up almost 18% of the day. Hit a little bit of market turbulence as it's given that back, and now it's starting to curl higher again. Ignoring these older notations here when I was first looking at the stock, this is starting to get volatile, and today it's rallying again. It's up almost 5%. This is the type of name that I want to be going after in a market like this, where we have the more speculative stocks beginning to firm up into these potential melt up conditions into end of year, because this is where those big gains are going to happen. We've seen a preview of it. But I think this one has the potential to go much higher. I'm looking right now to see if we can get a bit of a pre-earnings pop in this and getting people piling into this and maybe squeezing into that earnings announcement where we can unload some of our calls here. But again, this is the area of the market that I am focusing on right now. I'm focusing on the growthier names, some of these stocks that were absolutely destroyed during the bear market of 2022, that are just now starting to get legs again and looking like they're going to start moving higher after consolidating for months and months and months.
Yeah. And so this here, we were talking about it on the call. This is what we call an echo trade. Okay. And let me define this and pull up the longer chart of sound, because I think it's a great example. Echo trades are trades that I've seen occur only 2 times in my entire 30-year career. I saw them occur in 2002 through about 2004. I saw them occur in 2009, 10 through about 2012. And what right now has in common with those periods, other than the fact that they're shifted about 10 years, notice that is about a decade, is that we're 2+ years out from a bear market. Okay. The 99-2000 internet bubble bear market, the global financial crisis in 2008, 2009, and what I'll call the post-COVID hangover, back in 21, 22. And what you see is, and it sounds a perfect example. You have a company that, for whatever reason, I've got the max chart up here. Sound, when it came out, was I don't know where the IPO was, or what was this? Was this a SPAC, or was it I think it just IPO'd?
I think it just IPO'd around $8.
Okay,
Back
so
in
it IPO'd about $8. It instantly traded up to 16. And then it got smashed, okay? Because it basically went public right in the beginning of 2022, right as the market turned over. And then the company built a really, really long base, okay? We shook everyone out. And the stock didn't do a whole hell of a lot until recently, back in March. And now the stock is consolidating at this lower level, at this higher level. So what I like to call, we call these echo trades, because what we're looking to do is identify a company that's got a big end market, a big idea, a big, what they call in venture capital, total addressable market. Okay. So, attacking a big opportunity like Sound is. Find one that at some point the market ascribed value to. At some point, and again, I'm not saying it was the right value. Obviously it wasn't, but they ascribed $16 a share. But then find those companies that don't go bankrupt. Okay. So if I actually wrote a note back in May of 22 that I said, if it doesn't go bankrupt, it goes up 5 to 10-fold. And Roblox was one of the companies that I put in there, by the way, because I was basically, my point is while there's a lot of speculation in bubbles, that speculation doesn't necessarily, for most of these stocks, doesn't happen in a vacuum. It happens because there's a big idea. People want to, there's something to believe, Roblox being a great example. Yeah. And then once we get through the bubble, things settle out. The stocks are down 80-90%, but they stop going down. And then what you do is you set up this echo trade where you can get in. And then as we get through the middle to later innings of a bull market, the market rotates and returns to these. Okay. It didn't go bankrupt. The economy's good. And let's pull up one that is is an absolute example of what just happened recently. Pull up Carvana.
I was going to say, you got to be calling about Carvana.
Got to talk about Carvana. This is what an echo trade becomes, an echo boom. Okay. So, this company, obviously, I mean, we put a buy on this stock back in 2019 or 2020. It doubled in like 3 months. We sold half, and then wrote a bunch down. Investors made a lot of money still. But, the stock eventually, it didn't go bankrupt last year. Okay. It actually survived. And then from there, it's gone up. I mean, if you bought it, it's $4. And where's the stock now? 230. Yeah. I can't even do that math. What is that? 58 bagger? I don't even know. That is a
almost 7,000%. How about that?
Okay, 7,000%. There you go. Good trade if you can get it. But this is what we talk about with echo trades into echo booms. And so what we're really interested right now is I think there's a bunch of setups like Sound, and we've got more, and we're going to start talking about them, that you kind of, I don't necessarily want to say you've got an asymmetrical risk reward, but from a technical perspective, you kind of do, which is, you've got long extended bases, well-established price discovery around these levels. You've got companies that have stabilized. They're not bleeding. They're not going out of business. But the company had been valued at a multiple of what it is today. And we're basically long for the option that perception can return. And so Sound, go back to that chart, we saw it happen in March. That perception returned for a period of time. And then the stock sold back off. But funny enough, the stock didn't go back to where it was
right.
$1.70.
It wasn't down to a buck. Right. Yeah.
It went back to 420. So to me, like I think this is where you want to begin to focus. So Lily and Constellation are bread and butter, just trades that you can make 10, 15%. You can put options in it. You could sell puts, generate some income, et cetera. What you want to start seeding your portfolio with are ideas like Sound, because I think we're going to see more and more of these echo trades that can become echo booms, and it'll happen across the next 3, 6, 12 months. So we have time. But when these go, I'm going to cherry pick here. This is the one we wrote about on Monday. The greatest echo trade of all time. I don't know how far your chart's going to go back. Amazon.
Yeah.
Okay.
I'll make it a weekly so it's not so jumbled.
Yeah. Go. Amazon 1997 to the end of 2001. Okay. Which is from when the time it went public. Yeah, there we go. Okay, so you can see in the chart here. It goes public. It goes up 8-fold. Then it gets cut by 70%. And then look what Amazon did throughout 2002, 2003. It went up, but it kind of just, it was gradual. It hung out and go into 04,
that was a nasty bear market too. That was going up.
Yeah, it kind of just hung out afterwards. Now go keep on stretching the chart out. Okay, so we hung out. Now we start moving higher. And there we go. We're off to the races. Now, obviously, I'm using Amazon, one of the greatest growth stocks in the history of humanity. So, but this is an example. You had a year that you could have bought Amazon down 50% from where it had been a year before. And, it wasn't going bankrupt. It still had a big opportunity. And so, I can't tell you that Sound's not going to be Amazon. No. I can't tell you which one of these dozen stocks that we'll identify is going to be the next Amazon. And maybe none of them will be. But if they are 1/10 of what Amazon is, what we're trying to do is put ourselves in front of the opportunities. And part of this is acknowledging what you don't know. Okay. I don't know what the next Amazon is going to be. I don't know what the next, Google or Meta is going to be, but I know what they look like, things that look like that are. And so if you can find, these echo trades that would big or small, Roblox would be a larger version of this. I think it's a really interesting opportunity. And when they work, we're not talking about making 10, 15%. We're talking about making a double, a triple, a quintuple. I mean, Amazon, from the bottom, you made 700 times your money or whatever it is, but they're out there. This is the time to begin to take advantage of this. You've got this asymmetrical risk reward. Once a decade, this happens. And I think this is emerging right now.
And just as an aside, out of the Sexy Six, this is my favorite chart, just because it's knocking on the door of 200 and it never really extended beyond those 2020 highs into 2021 right there. This thing just sat and went sideways for a whole year and then got hit by the bear market and is now just coming back to those levels. I feel like this one is very much ready to go once it can sustain a move above 200 right here.
I also read that Amazon has 450 billion of free cash flow generation in the next 10 quarters or something. To put that into perspective, Apple has bought back 680 billion worth of stock in the last 10 years, which, by the way, would make it a top 10 S&P. Apple's buyback would be a top 10 S&P 500 company by itself. But Amazon in the next 10 quarters is going to generate I don't even know. That's what size company? That's like a Visa worth of free cash flow. So I think that's something that could really help the stock as well.
Not bad. And I do have a bunch of Amazon boxes that just for some reason show up at my house every single day. So I'm helping as much as I possibly can.
It's called having a wife and kids.
Yeah, that's exactly right. All right, so what's next? Do we have any charts that we really need to hit on from the chat? I know you said you have the chat up. I do not. So if you would like to feed me any type of chart requests and we can talk them through.
Well, let's go through. Let's go through. I'll give them to you. I want to hear your thoughts, then I'll share mine. Let's talk about the stock of the day. I'm seeing if it was up on my TV. Palantir.
Never heard of Palantir. Palantir. Let's see. The CIA. How's the CIA doing?
The deep state's doing just fine.
Palantir, and I've said this before, I'm not trying to be a broken record. It's a tough stock to trade, especially if you're trying to trade breakouts on it. It can be messy. It can be volatile. This is what I would consider a buy the dip stock to hold. I've said going back more than a couple of years that this is one of those stocks that should be on your list as the next big name that everybody's talking about. It's certainly achieved that status right now. I mean, I wouldn't go out and buy on this earnings gap right here, but this is a very impressive move, and it has been overbought and moving higher for some time now since it broke out here and then retested back in August. I mean, hell of a stock, hell of a chart. Yeah, it is getting a little too close to the sun right here, as far as I'm concerned, for a trading opportunity. But I mean, you can't deny the strength in a name like this. So that's my 2 cents on Palantir, the world-beating AI everything stock.
Yeah, look, I agree. I mean, the only thing, and this is what happens. I'm going to bring it back to Lilly and Constellation, because I think there's symmetry here. I think Lily's great. I think Constellation's great. I think Palantir's great. If you would have bought Constellation when it looked like this, you had no idea that this FERC non-news was going to come, and look at where Constellation looks like now. So, that's why it pays to own winning stocks, but it also then pays to sell them when you've got RSIs, or not buy them when they've got RSIs north of 75. So love it. Buy it on a pullback, right here. I just think that let it breathe. I use this example all the time. It's like playing blackjack, right? You do not buying Palantir here at $50.93 with an RSI of 75 with a 2 week to 2 month view. You are not playing a strong hand. No. A blackjack against the dealer. That doesn't mean in 6 months, 12 months, it's not higher. Actually, I think it will be based on everything. But like that's a tough hand. So how about here's an interesting one. MRO, Marathon.
Marathon, yeah. They just reported earnings, right?
Yes.
It's a really good looking chart. I kind of, energy is one of those things where, it just gets better as I zoom out. It gets better and better. Sideways forever here, going back to the middle of 2022. I mean, if you guys remember back in the early days of the bear market of 2022, energy and mining stocks and stuff was just ripping higher during the first few months of the year, and then just got destroyed heading into the second half of the year right there. The trade didn't hold up and just got dragged down with the rest of the market. But it's been going sideways ever since right there. Oh, man, I really like the look of this. It feels coiled and ready to go. Is energy going to be a big play in the next 6 months, do you think? I mean, is oil going to be a big play? Where do we sit on this?
It's complicated. I've done a lot in the energy patch. My fundamental belief is that the world is in a equilibrium somewhere between 65 and 90. That's where we've been for several years on crude oil, and we continue to be in that equilibrium. I think when you're long energy, but I got something special about MRO, why I also like it. Maybe love it. When you're talking about energy, you're fundamentally long chaos. We talk about Palantir being long chaos. Yeah. Well, Iran goes and throws a nuke somewhere. You're going to see a lot more chaos. And, this stock will be $40 in a nanosecond. So that option right now is valued at 0 in this stock. So I like buying energy here, especially what I like about MRO, and I hadn't seen it. Thanks for whoever I don't. The real name isn't here. Think Bresler. I can't say. I don't know what it is, but it's got a great base on it.
Yeah.
One other thing, and I don't know if you know this, the Marathon Group of companies, they buy back stock like crazy. So in 2017, there were 850 million diluted shares outstanding. Right now, as of the most recent quarter, there were, let me just pull up the quarters here. Most recent quarter, remember I said 850, they're at 566. So they have brought down the share count by a third. So I think this is a really, really interesting stock. You got a great base. You got, this asymmetry. You're at the lower end of the range on energy, and these guys buy back stock like crazy. The only thing I would say that I struggle with is a Trump win is good for American energy independence, but it also means we're going to drill and create a lot more oil. I don't know that it's great for prices, but if anything, the people that are going to drill for that and earnings are going to go up are these guys. So realizations may go down, but if they double the acreage, they can look at. So that one's kind of a tough call. I really like this trade. This is a really interesting trade.
I mean, just the chart, like you said, the chart alone, and then knowing where we are, where oil is right here. I mean, that's enough for me. And the buybacks just seals the deal. I mean, this this thing is tight right here. If it can sneak above 30, I feel like you could blink and it could be 40 very, very quickly.
Yeah, no, I like this one. Here, another one, because I know there's going to be tons of people. What's your take on gold here?
Gold is stretched. I'm more interested right now in seeing how we rotate into the other metals. Copper looks very interesting to me right here. I know you've talked about palladium recently. It's palladium, not platinum. You've talked about, right? Yes.
Palladium. Yep.
Yeah.
PALL.
Yeah. I'm much more interested in the secondary metals and in the industrial metals right here than I am in gold. I feel like gold is kind of in a feed the ducks territory right here, especially with the echo boom trades perking up, with Bitcoin perking up right here, and gold has been on. I mean, it's been an incredible run this year. It's exceeded most expectations, I would say. I think that's kind of an obvious thing to say about it, but it certainly has. I don't think anybody was seriously talking about gold 2800 by this time of year outside of our circles here around Paradigm. But yeah, I'm more interested in other metals at the moment. This is not something I would tactically try to buy here. Longer term, plenty of great strategies, but yeah, for me, I'm moving on to other things.
Yeah, look, the same as and gold more so than some other companies. I mean, Palantir went up on great earnings. So, you've got a stair step in the underlying fundamentals. Gold's extended on, very strong underlying kind of fundamentals, but it's not like they just had an earnings report and blew out the number. So I think that when I get commodities that are very extended from the 50-day moving average, they tend to revert even more powerfully than stocks because they really don't have an underlying, a metric that people can point to. So look, I think gold goes to 4,000, but it probably goes to 2,500 before it goes to whatchamacallit, before it does that. And let me just pull up, let me see where it is, right? 2,800.
Yeah.
I think actually I could see that. I think that people are so leaning forward on gold. I would be amazed if it does. It's going to see that. Well, first off, it's a mathematical fact. It's going to see the 50-day moving average. There's no doubt about it. Like, that's just math. That was everything always sees the 50-day moving average. The question is, does it do that by going flat and the 50-day moving average moving up to it? Or does it do it by it going down and the two meeting? I'll take halvesies on both, 27, 2650 on gold, but I think it has to take a break.
Yeah. And it could be quick. Like you said, the commodities corrections can be severe. It might overcorrect as well. I wouldn't be surprised, honestly, if we didn't see something below 2,500 in a hurry. If it does lose steam, just a nice hard reset and then just chopping chopping along
The,
for a while. That makes a
the
lot of sense.
I published, I think I published in Truth and Trends the other week that the speculator like exposure, you can look at the CBOE open interest on gold contracts is at all-time record highs. And again, I can't make this. When we're talking about trading, we're talking about short-term high probability bets.
Yeah.
When you're super extended from a moving average, when you have like I've got data that can show you we're at an all-time high on speculative bets, it doesn't mean it doesn't go higher. There's a 10, 20, 30% chance that it goes higher, but that's not a 70, 80, 90% chance.
Yeah.
So we want, it's just hands of cards, and you want to put the bets down, because the nice thing, unlike the poker table or unlike the blackjack table, you can walk up to the table and choose your hand when you're trading. Yeah. Right? Like I sit down and play blackjack. He's just going to hand me whatever cards I'm going to get. Here, I can be like, ooh, I like that. I like that deal right there. I'm going to do that. And that's the beautiful thing about trading and why it's not gambling.
So. Yeah, the card I would pick here, looking at something like an FCX, which isn't a pure copper play, but it does move it. But I mean, it's right down here, sitting on its 200-day and starting to perk up. We have earnings in the rear view right here, and copper is starting to curl higher right here. I feel like something like this, to me, is a much stronger risk reward play than gold at the moment.
Yeah, no, I agree. I think you can play the same theme as you can play the same things that are driving gold while just having a little bit better near-term probability. And I'll say here, one of the questions that we saw on the chat here was why has platinum and gold and also silver and gold, why have they the traditional relationships have broken down? Like, meaning gold is trading more expensive to those other metals. And I think there's one main reason is that those traditional relationships were based on the fact that platinum and silver had industrial uses and gold really doesn't. But what we've seen is the industrial economy for the use of platinum and silver is struggling. It's fine, but it's just, not as robust as it could be. And gold, without a doubt, I 100% believe this, when the U.S. went into Russia and took the $400 billion or $300 billion of treasuries that they had, every despot on the world, who, by the way, owned a bunch of treasuries, said, and this time I'll use the S word, oh shit, I don't want to be holding treasuries when the U.S. government and a bunch of the Western governments can just come in and take my $400 billion. And they're not wrong. And so I think you've actually seen real legitimate sovereign buying of gold. They will buy silver, they will buy platinum and stuff like that, but I don't think you're seeing it as much. So I think that's what's driving it. What I'm going to tell you, though, and I tell you this is coming, it might not be this year, it might not be next year, they're going to buy Bitcoin as well.
I think that's been happening. I mean, I know this was a while ago. I heard rumblings about North Korea.
El Salvador obviously has done what they've done. I think the Republic of Congo has done something, but I think that when you see that, I think you're going to begin to see that. People don't talk about it. Sorry, I keep on coming back to Bitcoin. I just think Bitcoin's going up, man. I want us to make money. Yeah. I think you're going to see corporate treasuries buying it too. Like I have a retirement account for my son who's 11 years old. And I think I'm going to take not a retirement account, a college account. And I think I'm just going to take most of the cash and just put it into Bitcoin, because then we're just sitting there. It holds value and it's also kind of investment. It could get cut in half. I understand, but he's not in any hurry. He's got 5, 6, 7 years, and that's the kind of bet you want to take with that. Let's see what else we got. I got one more here that I'll pull from the list. This is an interesting one. CRDO.
This is a Matt Inslee stock.
Was that Matt who said that? I don't even know who said it.
No. I know Matt. I think Matt owns this because we do tend to talk about this one a lot.
Okay.
Again, this is a hell of a chart. It's pretty incredible. It does look like a tough trader to me. Again, this is one of those situations here. It's pushing toward these highs. Is that all-time highs for this? I'm gonna go back. Yeah, it looks like it. Very strong stock right here. Tactically, it's not at a risk reward level for me to buy something like this, but it looks great. I mean, it's extended. A lot of these names are extended that we've been talking about today.
Yeah, look, I think it comes back to what we were saying. Let's kind of, I'm not trying to wrap up, but let's put it all together.
Yeah.
We started out with two stocks that have absolutely crushed it, mega winners, awesome stocks, Lilly and Constellation, where you're getting an incredible bite at the apple. So you want to own an awesome chart, but you want to buy one that's an opportunistic buy. There you got Lilly and Constellation. Then we talked about a stock, an echo trade, Sound, which is this incredible pattern that, you've got something that had been much higher, has based out, and is now showing some signs of life. That's putting probability on your side. Finally, we ended by talking about some awesome winners, gold, Credo, a couple other things that are Palantir, that are very extended. Those are the ones that intermediate term, they're still probably, they're going to be awesome. Again, I'm not trying to make a fundamental call on any of these, but right now the probability is against you. So this is what you need to do in a bull market is, constantly as a trader, okay, as an investor, it's another thing, but as a trader, reshuffle your deck. You again, let's just stick with this. I don't want to beat it over the head too hard. We got 30 tables out in front of us in the casino, and we can choose which table we're at. So if you were just at a table owning gold and you just crushed it, now though, I can see the next hand coming, and probabilistically it's not so good, but I can walk from the gold table over to the copper table now, and I've got full visibility. I got full transparency. And when I say that, it's about probability. What I do know is 70, 80, 90%, probabilities, and 10, 20, 30% probabilities, based on RSI, based on overbought, oversold, any number of pieces of data. So I think that kind of rotation is what makes great trades. Buy great winners that have fallen on earnings, set up for these echo trades, take some profits on, extended assets. And I think that's how you can create a money-making machine when we're in, the middle stages of a bull market here.
Yeah, and you talk about those middle stages of the bull market. Think back to how, just to put it into context, about how everyone was rushing into the sexy six, bag seven, over however you want to say it. They were rushing into those big stocks. Everybody was piling into Nvidia during the first half of the year. Now that people are a little bit more confident in the market and the market conditions, if you want to just play off of how sentiment is and personifying the market right here,
yeah,
they're going to be more inclined to flow into these quote unquote riskier names, some of the more beaten down names, because those are the next in line to really start moving.
It's this rotation, and that's how you optimize your returns, because look, I think the Mag 7, or especially the Sexy 6, are going to be just fine. Yeah. But, and right now they're a lot more attractive than they were 6 months ago because they're not extended like Palantir is, but just be active, be tactical, plan the trade the plan. That's my best advice.
Well, I think we can leave it at that. This has been a great election roundup today with not a lot of election, which is what I like to see.
Someone's going to win at some point. That's my prediction. Someone's going to win at some point, and life will go on, and the market will open and eventually go up. That's my really, I'm going out on a limb here with those predictions for everyone. Yeah.
And my final prediction is I'm going to get fewer text messages about who I should be voting for. And my phone will be buzzing constantly about that. So
we were talking about this on one of my threads on WhatsApp, not actually the Facebook thing. I've got people that work with me that are in North Carolina and Pennsylvania.
Oh, yeah.
And they're like, oh my God, I'm in Connecticut. No one comes and bothers me. So, yeah.
All right. Good stuff. Well, thanks for taking the time to join us on Top Trades Live today, Enrique. Always awesome to talk to you and get your perspective on everything. And now that you're done traveling, I'll see you next week, same time.
Let's make some money. Let's get on here. There's lots to do.
Let's celebrate the end of the election. Hopefully we will know, and we won't have to talk about it anymore next Tuesday, and everything will be great. Yeah. All right.
Awesome. Thanks, everyone.